Good morning, everybody. I hope everyone is doing wonderfully well wherever you may be. And again, it may be morning, it may be night, it may be middle of the day wherever you are logging in from. But I welcome you to the game plan where we're going to get ready for the start of the U.S. markets here in the U.S. East Coast time frame, and we're going to get right into action. So, a couple things I want to go over. Number one, as we go into things here to start the day, I want to talk a little bit about the ADP private sector number. So again, this is a holiday week, meaning you have Good Friday coming up. The markets are closed, at least the US markets are closed. Most markets around the world will be closed as well. Crypto markets, of course, they are staying open. That's just the nature of crypto, 24/7, 365. But the bottom line is ADP private sector came out 8:15 a.m. Eastern time, came in at 145,000 jobs created. That's private sector only. That's not the big jobs number coming up later this week. That's just the private sector. Now investors were expecting 210,000. So it was a weaker number than expected. Now, what does that mean? Well, weaker number initially is good news, right? Because it means the Fed may hike less. Maybe they'll even pause at the next meeting in May. However, this is the kicker, guys, and this is something I have said for a long, long time, is that bad news will eventually become bad news. Now, why the heck would the Fed stalling out on hiking and maybe even pausing rates, in terms of hiking, be a good thing? And the answer is, or bad thing, I should say. And the answer is very simple. It tells you the economy is slowing. As long as inflation's above 2%, the Fed cannot cut rates. Okay, so again, there's this lot of hype out there, people hoping and praying that the Fed will cut rates. It is not going to happen. Jerome Powell has said that to the nth degree, that he is not going to cut rates because he doesn't want to repeat what Paul Volcker did in the 80s, where he cut rates too quickly and inflation roared back exponentially fast. So again, guys, the bottom line is you're starting to see the futures actually weaken a little bit on that slightly worse than expected jobs number. Now, we'll see what the jobs number is in the coming days for the non-farm payrolls report. But the bottom line is we're looking at, I think, a starting switch point where bad news means recession. And the recession is even worse this time because the Fed cannot cut rates and print money as aggressively as before. All right, let's get right into the charts. Here's the S&P 500 chart. Take a look, guys. And again, on the S&P 500, look at yesterday's high, right into a down-sloping trend line. I love this stuff, guys. Again, this is what brings me into you guys every single day. Take a look at this. When we look right there, we look right here, and then look at this pivot point right there. Does it make sense that the markets opened higher on Tuesday yesterday and pulled back? The answer is, just from this chart, absolutely. The markets ran almost vertically into a brick wall, this trend line being a brick wall. Now remember, when you run into resistance, the general prognosis is a pullback. The question is, after you pull back, do you break out or do you break back down? All right, so there's two possibilities here. One is we consolidate in a bull flag where we start to do sideways consolidation. And this is really key, guys. A bull flag is noted by a 90 to 45 degree angle. Let me zoom in on myself because I want to show you guys this. All right, again, a bull flag is a general vertical move. Bull flag starts with the consolidation. It's either 90 degrees or it can be a slope of 45. Anywhere between 90 and 45 degrees, that is okay for a bull flag. That's what we're looking for here. Do we get that bull flag consolidation pattern, or do we just see a sharp pullback? In my personal opinion, I think the markets are very close to a major pivot. I've done calculations. I've looked at cycles. We're very, very close. Going into next week, we may see a sharp turn lower in the S&P 500. All right. And again, you're starting to see weakness in things like the semiconductors. Take a look at NVIDIA today, guys. NVIDIA, which, number one, I pounded the table on this short trade. I said, guys, this level up here is epic resistance. Not only do you have this trend line, you have this trend line, you have this trend line, all of them converging in this 270 to 280 range. This to me is a short. Today, NVIDIA is dropping. Let's take a look at the real-time action on NVIDIA in extended hours. Look at that, 269. So you're down about $5 on NVIDIA this morning. This is, to me, just the beginning of a bigger move to the downside. Now, listen, NVIDIA is going to have bounces. It's one of the favorite stocks out there. Investors just love this. AI, all this other stuff. By the way, is AI something that's going to impact the stock in the next 6 months? Are they going to all of a sudden start printing money because of AI in the next 6? No, the answer is no. This is a long-term story, a lot of companies, but the bottom line is it's helped drive the stock price up. For us, it drove it right up into resistance. I couldn't ask for anything more. Thank you very much. Emotion. And I say emotion because the talk of AI in any stock gets people rocking and rolling. Greatest example of that would be the symbol AI, which is this company, C3 AI. Again, we've had a monster move. Look at this. When AI started to become popular, it was trading at $10. It runs to 30. Then it pulls back. Then just a couple days ago, it runs to 35. Today or yesterday, it pulled back on the back of some accounting issues that a short seller raised on it. Whether or not they're true, I don't know. But the stock was overbought, so it makes sense that we would see that pullback. All right, let's keep going, guys. Gold. Gold staging another up move today. This is real-time action on gold right here. Another green candle. Look at the flag pattern breakout, guys. Again, flag. Look at that pretty flag. Here's your flag pole. And this is what I talk about in flags, right? So look at the angles of this. It's a sideways consolidation that's generally 45 to 90 degrees. And again, it forms this sideways chop. That's consolidation or digestion of the recent up move. That's very, very bullish. Notice how it happened above this down sloping trend line. Pivot high right here, right? Pivot high right here. And then here we broke out, we retraced, we consolidated. Now we're breaking out. Where's your short-term target? Right up here. So you're looking at 2075, 2080 double top. It actually would be a triple top. Now, I saw someone asking this question earlier, guys. And again, I do my best to answer a couple questions here and there. I just have to get through what I want to get to you guys ASAP. Someone asked, how much of a pullback would we expect on gold at the double, the triple top? That's a great question. To figure that out, what we want to do here is we want to look at the chart. So basically what you have here, all right, is sideways consolidation. In fact, let me just go to this. All right, so here's your double top right up here. And let's say we go straight up there. The essence of the pullback should bring us back to that former pivot high and consolidation. So you would put a line here in at around 1960. And if we hit this level, let me draw a trend line here so you guys get this. So if we go up here, you should get a pullback here to about this 1960-65 level. You also have the down sloping line, but less likely will go there. The bottom line is we recheck back to this pivot high, all this consolidation, and that becomes your buying opportunity for the next leg up. Off to the races we go. I am now isolating down about a $2,300 price target on gold by year end. I think, again, I've showed you guys this in the past, and I think it's remarkable. But if you go to the 1970s, you had a 9x on gold from the lows of the consolidation. Now, we're not going to do 19x. Let's not get fooled by that. All right, 9x was in a world without Bitcoin, without a lot of alternatives for investments. Do I think we can do a 3x? Yes. Do I think we're going north of 5,000 over the next couple years? I absolutely do on gold. But Bitcoin will take some of that up. Speaking of Bitcoin, let's go to it because we have some big stuff to discuss on Bitcoin. So Bitcoin, again, guys, continues to hammer on this upper level. I'm going to tell you this. You now have 3 days left. 3 days left to break out. If you don't break out in the next 3 days, you should see a big sell-off next week. So ticking, 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 tick-tock, 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 right? We're looking at a scenario here by the fact that we're seeing Bitcoin has struggled here. Even when the U.S. stock market was ripping higher, we saw the dollar collapsing yesterday, breaking a key trend line. Bitcoin's not breaking out here. What's going on? Well, needless to say, it's at a pivotal level. Literally for the last month, I've been saying, guys, watch the 28,500 to 30,500 level. That is your major resistance level. That is the biggest level in Bitcoin, the biggest by far level in Bitcoin. All right. And again, that's the key here to understand that that is your level. By the way, I'm getting distracted. I'm seeing natural gas ripping up. I have a nice long position in nat gas. We got to go to nat gas here real fast because I have some watch lists out there on nat gas. Look at nat gas, guys, ripping here to the upside. And again, what a beautiful little move here on natural gas to the upside. Again, this is another one. I pounded the table on natural gas. I've said, guys, right around $2 or below is your buy level on natural gas. Huge level here of natural gas. Could it go a little bit below 2? Sure, it could. That's the nature of the beast. But the bottom line is, look at oil, still around $80 a barrel. Look at inflation, not going anywhere. All of these type of things mean that ultimately natural gas will go up. Think about it like this. Yes, a lot of funds got stuck on the long side when we were much higher. They've had to unwind those positions. You've also had a lot of kind of sentiment indicator changes and a lot of bearishness come in. I love that. You show me a bunch of bears and I will go bullish every freaking time. And I'm dead serious on that, guys. Again, that is the indicator. That's what you want to look for. You want to compile technical chart levels like this on natural gas. I want to show you this. Look at this. Look at the downsloping trend line and this double bottom right down here. That's what it is. Okay, that's the beauty of it right there. So in any case, that's what we want to follow very closely there and continue to look for on this. Okay, I see Brock saying, Gareth, about Bitcoin, is there a strong trend line resistance from 64 to 47 to 29? We can flip back to Bitcoin real quick and just see what we got on that one. So it's from 64. And again, I'm trying to see where you're looking from starting. So 64 to 47. So you're probably looking to this high here. All right. So yeah, I think I see what you're looking at. You're looking at this trend line here. Yep. Yeah. That actually just adds even more resistance. So actually, I didn't see this one before. Congrats, Brock. You're on point on this. That is a trend line. Now, granted, we were above it, but look at how it was reestablished here, guys. This is some pretty cool stuff, and I love teaching in this. So you had this line here, right? Then you broke above it, and then look at how you came below. Actually, you hit it here. Notice right there, you had a little hit right there. Then you broke below, and then look at how it reestablished. I love how trend lines can reestablish themselves right there. And then if we pop up, that's going to be more resistance. So this adds to the key kind of factor of saying, can Bitcoin break out above 30,000 or so? Sure, it could, but probabilities, my friends. All right, probabilities are what we want to follow here. And again, that is the key here with Bitcoin. And Bitcoin right now doesn't mean it can't break out. It might, but the probabilities still say tons of resistance in this range. Let's keep an eye on that. Let's go to ETH here real quick and see what we got on that one. Ethereum is pushing up here, guys. I have a target price on Ethereum of 2,000. So 2,000 is going to be your little resistance here. You are trying to break out of an upsloping channel. That's semi-impressive. Notice how many times you've hit against it. But right up here is your next level. Look to short Ethereum off of 2,000 unless proven otherwise. In other words, if it confirms above. All right, we have to get through some more stuff here, guys. We're already running late here on time, but I got to get through more charts. We got to look at oil. Let's take a look at oil. Oil, again, gapping up. And I love this scenario, folks. So everyone wakes up on the weekend to hear that OPEC is making a $1.5 million barrel cut per day in production. OPEC plus, I should say. So that includes Russia. First of all, never believe OPEC. They talk about cuts and then they slip some oil under there. They're just trying to boost price. Number two, historically, when they have made cuts, it actually works in the opposite way. The reason why they're cutting, I mean, why the heck are they cutting? Well, they want price higher, right? Well, to get price higher, they're saying, okay, well, price is not going up because the global economy is weakening due to the Federal Reserve hiking interest rates. So ultimately, with a global economy that is weakening, how many less barrels a day, if the U.S. alone goes into recession, how many less barrels a day do you think that will be used? And I'll tell you one thing, it's going to be a lot more than 1.5 million barrels. All right. So again, keep that in mind, is that, again, this is reactionary by OPEC. They're trying to get in front of a recession, global recession. If that happens, oil's going a lot lower. In fact, yes, we hit my technical support level and we bounced. I'm looking to short oil if it gets north of 82.50. Huge level. Look at this, guys. Look at this level on oil here. Bear with me as I bring this up. All right, so if we take this pivot right here and right here, right? So we're right around 83 bucks. We draw that trend line across. We have all these little pivots up here. You have this little low area right here. That is an absolute short level on the chart of oil. So again, oil, guys, look for that short. If we can just pop up a little bit more, always go inverse. I know it sounds crazy, but when OPEC says they're cutting barrels per day, they're cutting in response to a slowing economy. 1.5 million barrels is not going to make a hill of difference in a global economy slowdown because Federal Reserve banks are hiking rates and keeping interest rates high. All right, couple other things here we want to go over here. We got to look at silver. I know I got a ton of silver bugs out there. Let's take a look at the silver chart here. Silver having a little bit of a pullback. I'm going to tell you this, guys. If you wanted to short silver here, I wouldn't say no. The reason I wouldn't say no is because, number one, you're into a ton of resistance. All right. And number two, it's a very extended chart. All right. Take a look at this, guys. Right through here, right through this area right in here. Look at this area right here. We just went up to it. And look at the extension move. Look at how sharp of a rise in silver you've had. Now, where are you going to pull back to? This is my estimation. You're going to pull back on this chart back to about $23.25, right to this lower level of consolidation. Look at how in this chart, you had a bunch of pullbacks here into this level, right? So lots of pullbacks into this level. What that's telling you, that is resistance. It was resistance or it was support. When we were hitting it here, we broke back below. When we go up here, we're now into resistance. Look for a pullback to that same level before your next leg up on silver. All right. Am I more bullish on gold or silver right here? Absolutely more bullish on gold, because gold is a pure play on inflation. Remember, silver is also an industrial metal. Doesn't mean I don't like silver longer term, mind you. All right. Silver longer term is a commodity. Commodities are generally going to trend higher because global inflation from printing of money for decades at this point are going to have an impact longer term on commodities. All right. But again, the next gold cycle is here. Absolutely. All right. So let's see what else we have on the radar here. We got to look at the dollar chart real quick. The dollar absolutely plays into some major things here. Do we have a major drop in the dollar? And by the way, this is one of the reasons why I'm perplexed with Bitcoin and a little nervous about Bitcoin breaking out, is because here you had the dollar breaking some major support, and Bitcoin should have been breaking to the upside. It hasn't done that yet. Doesn't mean it won't play catch up, but that is interesting to me. Upsloping trend line from 2021 through the pivot low here at 2023, right to this point, and then look at the breakdown that just occurred yesterday. All right, major wedge pattern breakdown. So that tells me, again, number one, it tells me that gold is going to be in good shape. Yeah, gold will pull back here and there, but ultimately gold probably goes higher. But also what's going on there with Bitcoin? Why isn't it breaking out? I mean, Ethereum's moving higher. Bitcoin so far is not. That's an interesting situation. All right. Couple other charts I wanted to go over. Palantir this morning doing a deal with Microsoft. That stock is seeing a bounce today. Let's look and see if there's any tradable levels on Palantir. The stock right now is trading up from a close yesterday of around $8.30. It got as high as almost $9, trading at $8.71. If we look at this, where's your double top? There's no trade on this on the short side until you get up here. Now, I'm going to do some education, guys. This is some education stuff. All right, so we're going to go back into full screen mode for just me so you can look at my pretty face. But the bottom line is that when you're trading, you have to think counter trend. All right, there's only one situation where I go with trend, and that's when you have a bull flag off of a move up. Then the bull flag added with a time count, and time counts I teach in the Winning Trader series at verifiedinvestingeducation.com. That's what it's all about. But otherwise, for me, I'm a counter trend trader. Why? Because generally when you get max bullishness, the top is going to be in. If you have 10 investors in a market, doesn't matter what market is, rocks, oil, natural gas, doesn't matter. The bottom line is, if you have a scenario where you have 10 investors, and in the beginning, no one's bullish, and that means you have 10 people that can buy. Now, 50% are bullish. So the stock has moved up. The crypto's moved up. You're now at a point where, 5 people have bought. You still have 5 more that can buy. When you get to max bullishness, all 10 have bought. What happens? Is there anyone left to buy? Nope. And then all that has to happen is one person to be nervous or want to take profits, and then things start to collapse. So by using technicals, I'm able to pivot, find the pivot tops and bottoms. People say, don't catch a falling knife, don't catch a shooting star, or don't short a shooting star. I say, don't do it unless you know how to read charts. Charts are your inside view into where the high probability levels are for a bounce. Obviously, you want to pay attention to what's going on with the stock or the crypto as well, but that is the key, guys. Think about this. Go inverse to Bitcoin at 69,000. Did you make money if you shorted there? Heck yeah, you did. All right, think about at 15,000. FTX panicking. Did it bounce? Yes, it did. Now, I don't think it's the bottom yet. Like I've said, I still have a target 12 to 13,000, eventually 9,000. Again, the 30,000 level is going to determine whether I believe that the bottom's in or not. As of now, we haven't broken and held above. So as of now, it's not. All right. The bottom line is, guys, please follow this stream, share this stream. My goal is 100,000 live viewers. 100,000 live viewers on here. I want that by the time I start doing this daily. The daily game plan, and I'm going to announce this right now. The daily game plan will start, all right, at the end of April. Let me just bring up my actual calendar, give you guys that date. That'll be every morning. I'm going to find the best trades. It's going to be earnings season. We're going to be making a ton of money in here. It's going to be on the 24th. On the 24th of April, these will be going daily. 20 minutes every single morning to set the day so you guys make money. Find me at inthemoneystocks.com, verifiedinvestingcrypto.com, and don't forget, educate yourself. It will make a world of difference. Again, the people that are the richest in the world, they've learned their trade, whatever it may be. They've learned and become an expert. Become an expert, make millions. Join me here, guys. Have a wonderful rest of your day.